Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode is Economic Headwinds, How Real Estate Investors Can Survive, Adapt, and Win.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today our podcast topic is Economic Headwinds, How Real Estate Investors Can Survive, Adapt, and Win. If you've been feeling like the economic winds has shifted, you're correct. Depending on what news source you watch or listen to, will likely determine your opinion on the economy. Inflation, interest rates, lending, tariffs, and the list goes on and on and on. Because of the businesses I own, and obviously this podcast and the business groups that I speak at, I tend to get more than one set of analysis. And what I find is that depending on the political bent of the economic reporting, using the same numbers, you get two totally different stories about the economy overall. The one industry that they all seem to agree on right now, though, is real estate. So in this episode, we'll talk about the economic headwinds as they relate to real estate investing. How is it impacting real estate right now? And most importantly, what smart investors are doing to not just survive, but to position themselves to win in this environment. The reality is that every downturn brings a bit of fear with it. But many great investors build their biggest wealth during uncertain times. So let's break it all down. First, what are economic headwinds? Let's start with the basics. When we talk about economic headwinds, these are the forces in the broader real estate economy that slow growth and make investing more difficult. Things like relatively high interest rates, rising operating costs, tighter credit markets, and tighter supply chains. The headwinds manifest as buyers struggling to afford mortgages, sellers that are stuck on 3-year-old prices. They can't get to today's reality. Numbers are not adding up as they previously did. Higher than normal eviction rates, escalating tax increases, and government regulation. See, the news media's unrelenting desire to sow fears into the economy right now is undeniable. It's been unrelenting for the last 9 months. Well, second, let's look at the 3 big headwinds that are hitting the real estate market right now. First, number 1 is interest rates. I'm sure that no matter where you are, you've heard some information about interest rates, where they're going to go, and how it's going to affect everything. Right now, they are relatively higher, and it put the brakes on affordability. It's not the high rates, but the rate of relativity to the rates in 2021. Let me explain this like I did to a group of business owners here not too long ago. When I was first in real estate, generally I was buying houses around 10% interest. My parents bought homes between 14 and 18% interest, but they still were able to buy. Not only them, but many other people. You talk to the younger generation today, and they can't believe anybody could afford a home at 10% interest. Well, what has happened is we've trained a generation, and now we're coming up into 2 generations. We've trained them that interest rates should be 3%, 2.5%, 4%. And because of that, we have people who own homes, and that's what they have. They have interest rates set at 2.25%, 2.5%, 3%, 3.5%. And it is relative to the current interest rates. So if interest rates right now are 6, 7, or 8%, depending on what you're buying and where you're buying it and what your credit is, to trade a 2% or a 3% mortgage rate and get one that's 7 or 8% costs you an additional 5% per year just in interest. So it's this relatively high rate that is affecting our economy because we have so many homeowners that experienced in the last 10 years these lower interest rates. See, a buyer who could have afforded maybe a $400,000 home just 3 years ago now might only qualify for a $280,000 to $300,000 home based on the interest rates. That squeezes the demand and puts pressure on prices, and then it adds to the extending days on market, how long it takes you to sell your house. And for investors, it does something else. It reduces buyer competition. Why is that a big deal if you're a real estate investor? Because now you don't have buyers competing for your home. The number one thing that increases value on a home is not how nice the kitchen looks or how great the master bathroom is or how open the space is or how the home flows. The number one thing that creates value on any home for an investor is competition. When more people compete for the same asset, it drives your price up. With fewer retailer buyers, fewer investors are, swinging blindly and we are seeing non-existent bidding wars anymore. All right, number two, let's talk about inflation and operating costs for a little bit. Let's start with inflation. Since inflation is a big part of the headwinds affecting the real estate market, but it's not the current inflation, but it's the inflation impact from 2022 through the last quarter of 2024 that is affecting our current real estate market. This lingering inflation from the previous governmental economic policy is now baked into all aspects of our economy, including real estate. Some of you may not be old enough to remember this, but I remember when we came out of the 1979 and 1980 economic status from, again, another political economic set of circumstances that drove interest rates on mortgages between 14 and 18%, and it increased inflation into all aspects of the economy, how difficult it was because how much more expensive things were. Well, that lingered for about 2 years into the next political economic set of ideas that were transforming it. And that's where I think we are right now. We have baked in interest, our inflation that we're having to deal with. But there is some good news. And that is since June of this year, inflation has dropped at or near the Fed target rate. And household incomes have risen. But I'll talk a little bit more on this later. Due to legacy inflation, rents have risen significantly along with everything else. This makes cash flow tighter on investing on properties, and particularly for properties, that are bought on margin. Rents may be up, but we got fewer people trying to rent those homes. I mean, the rental market's still pretty decent, but the prices are up, the interests are up, and when you combine those together, it creating very thin margins on a lot of acquisitions that are being financed and leveraged. So number three is this tightening in the credit markets. See, banks have been more cautious as higher interest rates cause affordability risks, because you may have been able to qualify and afford a 4% $500,000 mortgage, right? An investment property, whatever it is. But now with the rates being 7 or 8%, the bank's going, wow, that is consuming a much greater portion of the disposable or the cash flow of the property. And many lenders have tightened their qualifications. In fact, as even on the DSCR side, the debt service cover ratio side, their requirements have tightened over the last couple of years due to higher interest rates. They're requiring greater reserves. They're playing a bigger role in obtaining OPM, other people's money. Thirdly, how do these economic headwinds change the game? When the real estate economy is good, even bad deals can look good. You just rely on appreciation to cover your mistakes. And cheap money reduces an investor's risks because it's easy to cover the losses. But when the economic headwinds show up and the markets start revealing what is solid and what is a sketchy deal, that creates some problems and change in our marketplace. Fact is, here's some of the things that change. Sellers are not able now to test the market. You can't put a property out there at the very top end and expect to have, 10 or 15 people come through your open house. Homes are aging on the market. In my area, where we're at here in the Phoenix area, we're bouncing right around the 90 days on market in a market that generally is around 30 days. So it's much tougher to get a property sold. So you must be more accurate and more competitive now when you come into the market. Seller just can't test the market like they have been able to do in the past. Deals that don't cash flow, they die. We're seeing in the MLS where a lot of those deals that aren't cash flowing, they've been on the market a long time, sellers are just pulling the properties back off the market. In an environment like this, creative financing becomes much more prolific. There's less contingencies. In fact, his contingencies are generally not waived because things are tougher and buyers have more opportunities and options. A higher number of transactions cancel and never close. Fourth, where are the real opportunities right now? Okay, so let's talk about where some of these real opportunities are right now. And yes, there are opportunities, and they do really exist. Here is what is helping real estate investors. Inflation appears to be under control, and average household incomes are outpacing inflation for the first time since 2021. Consumer confidence is returning, and we just had a record-setting spending period according to the actual numbers. The job market finally has some statistical positive outlook, particularly in AI and in manufacturing. And that is going to spurn a much more money coming back in, especially as interest rates begin to drop. So first in this, our opportunities lie in distressed and motivated sellers. And yes, right now there are distressed and motivated sellers. And when the economy gets fully turned around and when the interest rates fully drop, some of these distressed and motivated sellers won't be distressed and motivated anymore. So now we want to take advantage of those, because days on market have been very high. And according to the nationwide statistics, the eviction numbers are up. So that's creating pressure. What we're seeing is that homeowners that are in situations where they have to move, they have to get out, they're looking for quick ways out. How can you just get me out of this house? What options do you have to get this out of the house? The price doesn't matter as much as the mortgage coverage. Landlords are burnt out. They're getting tired of evicting people. They're getting tired of the maintenance. They're getting tired of the higher cost of maintaining and keeping their properties, and they want to get out. Some short-term rental owners are underwater. They're being squeezed by ordinances prohibiting short-term rentals in many communities and in HOA. Small investors with adjustable rate loans, they're feeling the squeeze as interest rates have been high and their payments are high and their rents aren't covering. All of these types of sellers need solutions, not just offers. So secondly, what we do in here is we use creative financing. Many of the solutions with regards to creative financing can be found in my book, No Money Down. Like lease options. How can you use lease options in a marketplace like this? What about seller carryback? What about wraps or subject to financing? How can I use hard money with seller carrybacks? And what about joint ventures? How do they work, and how can I leverage joint ventures in a marketplace like this? My book, No Money Down, helps to answer some of those questions. So I encourage you to get some of the resources you need in order to help you with some of these creativities, because this is a perfect marketplace for them. When money is more expensive, acquisition terms can be more important than price. Sometimes the creative financing becomes really the leverage. The price is merely an afterthought if the rest of the numbers pencil out, right? Now, third, we're advising some of our coaching students to leverage rental demand while it's still fairly strong. It may not be a great time to sell. I'm not saying it's a bad time to sell. I said it may not be a great time to sell. We're not getting multiple offers. We don't have high demand. So why not hold the property? If you can pencil out a deal that carries you, up to 12 months, where likely selling conditions are going to change, become much stronger as interest rates decline, then even with economic pressure, you're going to find that people still need to live somewhere. And this lets a tenant pay your carrying costs until rising demand begs you to sell. And when the real estate economy turns, you may find that you like the passive income and the cash flow that you're now getting because you went to this buy and hold market. All right, fifth and my final point. It's your mindset shift that matters most. Here's the part that most people forget. Economic headwinds don't destroy wealth. It simply transfers it. Wealth transfers from those who are over-leveraged, those who are undercapitalized, those who are impatient, and those who are just pure speculators. But where does it transfer to? It transfers to the disciplined, the educated, those who are willing to be patient, and those who are prepared. Right now, your play as an investor should be to not panic. This is a good time to hone your skills, protect your capital, stay in the game long enough to catch the next upcycle, which is coming, because that's the nature of the thing. There may be down cycles, but there's always up cycles, and then there's other down cycles. But now we're at a place where you are in a position, if you wait long enough and you're patient enough, you're going to catch the next upcycle. And if you're investing in this market, hey, I'd love to know that. What headwinds are you facing right now? And what strategies are you working towards and what are working for you? If you found value in today's episode, be sure to subscribe and leave us a review. Share this with another investor who needs to hear it. That's all for this episode. I want to thank you for joining me on this episode of the Whitwam Wealth Real Estate Podcast. Be sure to check out our previous episodes of related real estate investing topics. I'm glad you're part of our growing real estate investing community. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to podcasts. This has been Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.